All right. Hey, everyone. Mark here, Mark P. Markets. Thanks for joining me for another Bitcoin video analysis here. Hold on. Let me just get this. I am simulcasting on TradingView. Today is a U.S. holiday, so the stock market was closed, but we had other markets open. I'm doing this because we should be prepared, for the week anyway. So hopefully people get something out of this. So here's how this is going to work, because I've changed my format recently. So this is going to be a 30-minute stream, okay? And in order to keep that at 30 minutes, I need to consolidate my Q&A portion. So if you have a question and you are a premium member of my community, and I know who everyone is, I will answer your question. If you are not a member of my community, I'm going to have to skip over your question. It's the only way that I can keep this at 30 minutes, okay? So I apologize for that inconvenience for you. All right, next. So the first thing we're going to do is we're going to go over the economic calendar. Like every week you should be doing that. Second thing, we're going to talk about this Bitcoin situation because I called a swing trade yesterday. I shared a swing trade idea, and we're going to talk about that. All right. And of course, the trade scanner, which has been amazing. I mean, it's certainly outperforming me. All right. So we'll talk a little bit more about that. And it's my formula, by the way. Okay. So my formula is outperforming me. And the next thing is, we'll get into that Q&A. All right. So let's get this thing started, shall we? All right. Because I talk too much. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, so let me just open up my TradingView thing over here so I can see what's going on over here. And let me take this off. Okay, hold on. There we go. Cool. All right, people. So oh yeah, by the way, if you want to share what city or what country you're from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey, and it's hot here today. Okay, so let me just move this along here. All right. So first thing I want to mention, all right, we're going to get into the economic calendar, but I just have to say something about the trade scanner, especially since Steen, he was talking about that Solana trade, 2.59 or 2.59% profit. That was just called what, yesterday? Understand something. I want to just explain. People don't understand what this trade scanner is or how to get it. It's a screener. So let me just briefly explain what it is and what it does. It's a screener, okay, with my personal criteria that I programmed into it. So people don't trust it because they think it's just taking blind trades, right? So when I first implemented this thing back in April, it was producing raw trade signals. It would just give you a notification and basically say bullish reversal or bearish reversal, right? And then look for setups. That's what it would say. And people are like, I don't know what to do. So thanks to Steen over here, Steen has helped me take it to the next level. And now the trade scanner gives you a take profit and a stop loss, which is based on the ATR formula. I've actually gone over that months ago. You could watch my videos. I explained the whole thing. I'm not going to explain it now, but that is what it calculates. So now it gives you a notification price, where to get in. It gives you a take profit, and it gives you a stop loss at the time of the trade idea. Okay. Now, we're working on the stock scanner right now. Previously, the stock scanner, because we have one for cryptocurrencies, we have one for stocks, and one is coming for Forex as well. Okay. But right now we just have the two. The stock scanner would just generate walls of symbols, right? Go along and it'd give you like 15 stocks. And you're like, what do I do with this? So again, we've refined that, right? So now the stock scanner, right? Thanks to Steen's work here, thank him for this. The stock scanner is even smarter. It will only pick one trade. We're not at that point yet, but it's coming very soon. Right now, the stock scanner is just producing less raw signals, but it's going to pick one trade, a long or a short, and it's going to give you the same thing, take profit and stop loss. But even more importantly, it's going to be smart enough to know when the next quarterly report is coming out. Now, that's huge because I tell people, don't take these stock trades a couple of days into the report. I was looking at Steen's tests. I mean, now it tells you, oh, this quarterly report is in November, or this one is October 25th or whatever. So now you know. And here's the thing. If it's too close, if it's within 10 days, the scanner will ignore that stock and move on to the next one. So you may not realize the immense amount of work that this thing is doing for you, that it takes off the table for you. Okay, now all you have to do is pretty much follow its instructions. Now, for people who don't trust this thing, now let me just explain a couple of things. Not all trades are green, right? And no, there is no such thing as a perfect system. And you may be in a situation where when it calls a trade, maybe you're sleeping, and that was the winning trade. And then when you get up and then it gives you a trade, you take the losing trade, right? That can happen if you're not taking all the trades, right? That kind of thing can happen where you just happen to be taking the ones that lose. Well, here's what you need to understand. There's really no way around that besides actually having the trade scanner trade for you, which is something we're talking about, but we're nowhere near that. So don't even think about that right now. But the point is, this thing saves you the time and the trouble, right? So you don't have to do the analysis. But here's something else. If you learn and understand context, which is why I do these streams, right? To help you understand context, you can be better prepared to judge those signals for yourself and say, oh, okay, you know what? The trade scanner, it called a long here, but I don't agree with that long. And it's because of this, this, and this. These elements in the context tell me it's a lower probability. So I'm not going to take this one, right? And that will help you. I don't like to use the word cherry pick because we're not cherry picking. But if the environment is not in line, because the scanner, it can't see everything, right? So we can still see better if we know how to apply context. Certain trades have a better probability than other trades, okay? Especially when you're in this type of environment. We have been in a holiday environment since August 15th. People don't realize that. People think, oh, it's a new day today. We'll have no, nonsense. Volume is pretty much at its low, right? We're in the middle of a holiday. I've been writing about stay away from the markets. You know, the week 3 and week 4 of August are the worst weeks to trade. And the trade scanner has shown a positive result, okay? And again, why? Is it magic? No, it's following specific rules. It's not blind. It's following very specific criteria. I mean, it's looking for a trend, and then when it identifies a trend, it then looks for a trend reversal on the side of that trend, and it looks for some momentum criteria. When all of that lines up, it gives a signal. So anyway, I just want to mention that because people are like, oh, what is it? How does it work? This and that. That's how it works. Now, it's the only way to get it, though, is it's in a Discord channel. Right now, the signals come out in a text channel. We're working on making an email backup, but right now, if you want that access, you have to be a member of my community, okay? Just so you know, there's a link in the description. And by the way, if you're looking for a new exchange or something like that, a broker to place trades through, consider the Bybit link in my description. That helps Stian out. It's an affiliate link for Stian. It helps him out. Stian, I haven't changed. I have to change the link. I still have the old link, but it still works. And it helps him out. It helps him further support. And the amount of work that he's been doing has been nothing less than, I mean, I can't even describe it. It's been amazing, okay? The work that he's doing, the custom work that's getting done here, and the improvements that he's making to the community and to make a better experience for you. So please consider that. Anyway, all right, enough talk. Let's get into this, shall we? Economic calendar. I'm going to make you guys work on this one. Let me see what's going on over here on TradingView. I don't see one comment on TradingView. I was really hesitant today to even stream on TradingView because I'm like, there's probably going to be no one there. I see only one boost. Do me a favor, TradingView people, boost the video if you like it, and also on YouTube, subscribe to my channel and like the video. That helps me out a lot. As you can see, I have new content coming out in the video, in my YouTube channel now that Alice has been helping me clip older streams that make, that where I make some important points. Make sure you check that stuff out. Okay. There's Alex. Speaking of Alice, there he is. And we got Alex too, all my people. Okay. Alex has been doing a great job moderating my community. I mean, he's on top of things, man. I mean, I like it. I mean, so I have a nice team helping me out now, and we're getting things done. So Alex, Alice, Stian, great job, you guys. Okay. So economic calendar, who's on top of it? Okay, what do we have this week? Now, the first Friday of every month is non-farm payrolls. The first Friday was the previous Friday. So what do we have this month? Anything? Anything worth mentioning, guys? Let's see what you guys come up with. Hey, DJen, how are you? Okay, anything? There's my TradingView people. Okay, cool. It seems like a quiet week on the fundamental side. Okay. From Greece. I don't know any Greek words. I'm sorry, but okay, welcome. From Greece. So, yeah. Okay, cool. So anyone want to take a guess at the economic calendar? Anyone? It's quiet, right? It's the first week of the month, and we're still in the middle of a holiday. So what do we normally look for with the economic calendar? Okay. See, so Steen says nothing to report that has any meaning. Exactly. There's nothing worth mentioning. All right. And it's important to know, what are we looking for? What is worth mentioning? CPI, maybe PPI, FOMC, any FOMC meeting, any Chairman Powell testimony, non-farm payrolls. I mean, that's pretty much the main ones. Everything else is kind of secondary and doesn't really have much of an effect on the market. The reason why we need to know these things is because if you're in a position, you want to mitigate risk, because things can change dramatically if there's a surprise in one of these reports, which you cannot know in advance. Okay. FOMC meetings. Right. So we don't have any this week, but that's any FOMC meeting, a rate interest, an interest rate announcement, even from another country, could be important as well, like ECB, Bank of England. One of those you might want to be aware of if you're in a Forex pair that can be affected by something like that. Okay, so those are like the main things. Also, company reports, quarterly reports could get in the way of things if they're big companies, like Microsoft or Amazon. That can have an effect like on the S&P and stuff like that. Okay, so that's what we're looking for. Anyway, so there's nothing really to report there. Let's move on and let's get into the chart here. Okay, I'm going to make the chart bigger so you guys can see. Oh, wrong button. There we go. Okay, cool. So, and by the way, if you like the videos that I'm putting on YouTube, do me a favor, put a comment on them and stuff like that. That helps out as well. All right. So for those of you that follow my Bitcoin trades, let me make this bigger so you guys can see it. This is not what I'm going to describe here is not the trade scanner. Okay. What I'm going to describe here is my trades. There's a channel in the community, in the Discord community, that's called Signal, and that's where I put my personal trades in that channel. If I have a trade idea, I don't trade alongside the trade scanner. My ideas work on a larger perspective. Okay, so let me point this out. People that got caught, and this is a point that I was making in my article that I wrote. People got caught in this, right? What was going on like a week ago? We had that SEC drama with what was it? The Bitcoin ETF. Okay, everyone got all excited as usual. Everyone overreacted as usual, and you had this vertical move. Okay, vertical move straight into a resistance. So anyone that bought that, I don't know what to tell you. Okay. I realize there are a lot of Bitcoin people out there that think Bitcoin is like the world and Bitcoin, like these Bitcoin maximalist people. You're going to have problems because Bitcoin is just a small cog in the big machine. Okay. Bitcoin is not the machine. The bond market is. And if you choose to ignore the bond market, you get what you pay for. Okay. And a lot of these Bitcoin maximalist people tend to ignore the bond market, and they bring up all these conspiracy theories and the market, inflation, right? Meanwhile, the bond market is still king. All right, and that's going to be the way it is. Why is the bond market king? Because it determines the price of borrowing money, and if there's not much money around to be borrowed, markets like Bitcoin suffer because this is not a real asset. Okay, it's a speculative asset. It's not a conservative asset. It's not something like, buying a stock that pays you out every 6 months. It's nothing like that. So it's not a company, right? So it's more like a growth asset. It's comparable more to like, a Russell 2000 stock, a growth stock, a small cap. That is what is more comparable to, right? So the bonds, if the bond rate, interest rates continue higher, and they have been in a bullish trend, that means potential is limited for the future. This is part of knowing your environment, which is the title of the stream, right? Knowing your environment is more important than just putting on trades just because trade criteria is met. My trade criteria looks for momentum. it doesn't really take into account the environment. Okay. But the environment helps you gauge potential. So, oh, should I let this one run? Should I be very selective with it? Should I be aggressive with it? How should I be? What helps you shape that decision is your environment. Okay. So let's talk about this environment and what's going on here with the Bitcoin price action. So, hold on. Okay. So first, right, we had people get caught. Now, since then, we had a pin bar develop. Okay, see the pin bar in this blue box here. By the way, I changed my chart to Bitstamp. I had the 8-cap chart on before, but I changed it to Bitstamp. People were telling me, I got some complaints about the 8-cap chart and this and that, and there was no reason for me to have that up anyway. So I changed over, just so you know. Okay, so this is the Bitstamp chart. Now, there was a bullish pin bar, okay, the other day, and that pin bar, okay, it's not exactly the best definition of a hammer, but it's a pin bar. It's got a long tail on the bottom. The high of that pin bar is 26,134, right? Now, since then, we have highs of what? 26,112. And what was yesterday's high? 26,081. Now, the buy stop that I put in the channel yesterday was at 26,200, okay, which was slightly higher than this bullish pin bar. Why do I do that? It was slightly higher because I want the market to work just a little bit. I don't put the exact high of the candle because many times it taps the high and then you get stuck in this thing because it pulls right back like it has here. So that trade should not be active. No one should be in that trade because it never went to 26,200. That's one of the advantages to using a buy stop and knowing to place the order slightly higher than the actual entry price, which would be the high of the pin bar. So since then, right, Bitcoin's pulled back and nothing's going on, right? We're back to 25.8, whatever. And I warned people about this trade to begin with. I said, if you get into this thing, if you happen to get in at 26,200, be careful of the conflicting signal. I'm not crazy about the environment because we had the signal, yes, but what's going to drive this thing was my question, right? We have a bond market that's been trying to kind of lighten up a bit, but that takes a long time. So we can't really count on that. It's a quiet week. We're in the middle of a holiday. What is going to be the catalyst to drive this thing? Another SEC event? I mean, we need a piece of news or something to drive this thing. If there's really no news, this thing is not only it's in a nice location, but here's what concerns me. This large momentum, this large bearish momentum, because that, you know what that tells me? That tells me that there are a lot of longs caught in this thing. Mindless people who follow news and react to news and apply logic, and they are now caught. So if they're caught and they're all hoping, right? They're still in the positions, they're hoping, and this thing starts testing these lows, you are likely to see another one of these moves. Because what is that? Why do we get those big moves? Yeah, this was triggered by news, but why do we get those moves? Because a lot of people are getting long in here, okay? And they're hoping. I got long in here too, and I got stopped out, but I know where to put the stop, and it got stopped out, okay? That stop was a 1,300 point loss over here. That was back in August, okay? If you held on to that trade was minus more than 5,000 points. If you, it'll come back. Oh, I hope it'll come back. Right, whatever. No, you respect the stop. Right. So I knew where to put that stop. The thing got tapped out and it got hammered. It got hammered because the whole world was trying to get out of this thing. Everyone that was long. So that can occur again here, possibly, if there are too many people long. One little piece of negative news comes out, you'll see this thing testing this low. Okay, this 25K low. That's very important to understand. And that's what I mean about the environment. So I would not get short this. First of all, I don't short Bitcoin. The trade scanner calls shorts all day long. I don't short Bitcoin personally. But if this thing pulls back into this 25K support line that I have here, right, basically 25K, high 24s, and we get a new bullish signal, I will be open to the long. I'm open to the idea because of the level and because the context. Right, this situation that we have in Bitcoin, I mean, you're going to have all people arguing on both sides. Some people are going to say it's a bearish trend. Some people are going to say it's a range, blah, blah, blah. Well, I let the market tell me, right? I don't think I know better than the market. And what the market tells me is that this entire thing right here, because that's the structure I am considering, that is a consolidation. That's not a trend. Okay. This is basically a midterm consolidation. This goes all the way back to April, and we're basically inside of this range. We're still in the range. So if we test the range low, that's a high probability location for a bullish reversal, as long as that low can hold. If it breaks, then it changes things and I have to adjust. But right now, I judge this on the midterm trend category as a consolidation. And in consolidations, I only want to know about range lows and I only want to know about range highs. I'm not really too interested when we get to the middle of the range. Okay. This area right here, the middle of the range, is the worst area to be putting on trades. Can anyone tell me why? My students probably know. Anyone want to take a guess? Can anyone tell me why that is the worst area to be putting on trades? Hey, Isaac, how are you? All right. Anyone want to guess? Let me see what's going on over here on TradingView. I like to check in with the chats every once in a while here. From India. All right. Welcome. Minnesota. Hey, Minnesota. Cool. I don't think I've seen anyone ever here from Minnesota. I had no idea you guys had computers over there. I'm joking. That's a bad joke. I'm sorry. Okay. What do you think will be the stock? Okay. Yeah. All right. So again, thing about questions. All right. Who said it there? Ella. Yeah, it's 50-50. Right. It's random. This area right here is the worst place to put on trades because it's completely random, right? It's 50-50. So anything can happen there. Maybe it goes higher, maybe it goes lower. Who knows, right? It's completely random. So taking trades here, especially on a larger time frame, is generally a bad idea, unless of course you like flipping a coin, or you like playing slot machines. You want to be more interested where probability can be more favorable, right? And that's in the range. It's either range low or range high. Okay. If you want to work in an area like this, right, in the midpoint area, you're going to have to work on smaller time frames and expect less. Because, like, for example, right, if this market rallies back up into this area, if it rallies back up there, there may be some day trade opportunities, right? But you're in, you're out. That's something like the trade scanner would most likely call something like that. But right now, based on this structure, I mean, I go to a 4-hour chart, right? Because this is one of the main time frames that the trade scanner looks at. The trade scanner would see this as bearish. Okay, and the trade scanner would be calling shorts, actually, right? But the trade scanner also considers all of this price action back here, right? And it will also consider part of this, which changes the take profit and stop loss levels that it chooses, right? That's why, like a week ago, before all this crazy movement, it was picking these very narrow take profit and stop loss levels, and that's because the market has become very narrow. So that's why it does that. When we have an expansion, like something like this, right, it's going to expand the levels as well because it's looking at the average true range, which changes as the market changes. Okay. So, yes. Well, so Alice says middle of, Kai says middle, right? Resistance and middle, right? So you guys got that. So that's highly random. So knowing this, again, is knowing part of your environment, right? Knowing not only the economic part of the environment, but the technical environment as well. This is a range. The middle of the range is the worst place to put on trades, or at least with any type of expectancy of it going, somewhere significant. If you're buying here at this point, you're taking very high risk. Okay. It can always go higher, but it's 50-50. There's no way to know. People need to understand one thing. The main thing behind this whole thing is markets are random most of the time. Most people, it's amazing to me that most people refuse to embrace that idea, but it's true. Okay. And until you do, you will fail. So that's what's going on here with Bitcoin. So until that level is taken out, right, there's nothing really to do here. My trade is still in play. The idea is still in play. It's not a trade yet because the entry price has not been reached. But if it gets taken out, maybe some news comes out over the next day or so, I don't know, and we get some kind of spike, right? And 26,200 is taken out. That trade will then be in play, okay? And of course, I gave everyone the stop loss and the take profit for that thing, and it's not a high expectancy trade. I'm not expecting that trade to go to like 30K or 32K or anything nonsensical like that. Anyone that gives you that type of information, right, and they over exaggerate these numbers, it's only to get your attention. I hope you realize that. All right, so again, so we're in a slow environment. Volume is low. Okay. Holiday environment typically means low volume. Volume is not going to just increase by flipping a switch and okay, it's tomorrow's Tuesday and we're back to normal volume. No, it's going to take a month, okay, for volume to work its way back up to more movement possible levels. Okay, the more volume, then the more of a chance we can see some moves. I want to point something out. Look at this. Look at Bitcoin. I'm just going to highlight right from where we are now all the way back to June. Okay, this is June's price action on Bitcoin. Okay, see that box right there? That is June. So going back to June. So since June, we had this move, okay, and we had this move, pretty much. Those are the and everything in between that. Look at this. Everything in between was nothing. So how many people were caught in that, taking too many trades, jumping in at every little thing, every little news item, every little YouTube video that comes out and tells you Bitcoin's on its way to 50K now. The altcoin market's going to rally now. Millionaires are going to be made. How many of you have gotten caught into that? Meanwhile, nothing happened in this entire period. Okay, from here basically to here, nothing happened. Okay, all you do is churn. So if you knew your environment and you said, oh, summertime is usually really slow, I should probably trade less, you will minimize your exposure to this. Because no matter how you cut it, especially if you don't have a system, if you don't have specific rules, if you don't have something like the trade scanner helping you, if you don't have anything like that and you're just going to kind of feel things out, you will lose a ton of money in that type of environment. Okay, expect, oh, the trend is going to start now, I can feel it. Right, no, this is churn fest. So any money that you've made randomly, like with your moving average crossover during a random trend move, you give it all back here anyway, right? And you never get anywhere. That cycle can go on for years. Just so you know, I've been through that. So I'm letting you know. All right, so that's my Bitcoin situation. Now, let me real quick point out a couple of things. I'm going to run over to the bond market here, right? Because you have to understand, this is, like I said, bonds are king. I saw an argument on a TradingView. Well, not really an argument, but I saw a little bit of a debate on my TradingView forum. And it was, some guy was saying to another guy, oh, you clearly don't understand Bitcoin and blah, 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 blah. Because the guy was agreeing with me and the guy was saying, man, every turn in the bond market correlates with a turn with Bitcoin, right? So, like, for example, bonds turn higher, Bitcoin turns lower, right? Bond turns higher. I'm sorry, other way around. Bonds turn higher, Bitcoin. The bond prices go higher, right? Which means rates come off and Bitcoin goes higher. If you look at this, right, US 10 yield, this makes it a little easier to understand. This right here is the yield, right? So it's the 10-year note yield. This is your interest rates. Right. If you look at this and you compare this to Bitcoin, you'll see what I'm talking about. Right. So every time rates are rising, generally, and I looked at a little further back, Bitcoin pulls back. And it's not just Bitcoin, everything pulls back because higher interest rates are bad for everything. Look where rates are right now. Does this look like a bearish trend to you? It doesn't look bearish to me. So anyone that's ignoring this, you ignore it at your own risk. Okay. Because if this thing breaks out over the next few months, if we see a breakout, then that's a negative for a lot of things. Like, for example, banks, there are many regional banks that are exposed to this. So if this thing pushes higher, this is up here, this is like bank failure territory. This is where out of nowhere, you get some surprise bank news. Oh, banks failed today. No one knows why. Right. Well, the rates were warning you the whole time. So understand that while rates were inside of this range, okay, rates for quite some time, look at this. Rates were pretty much like in this range, and we're still pretty much in the range. I mean, look at this. Look at this. This goes all the way back to November, okay, of the previous year. And the rates have been inside of this consolidation. As long as rates stay inside, then the market's used to it. The market's, oh, yeah, we've been here before. No big deal. But if we break out of this range, that's usually where you start to see effects. Understand that the bond market, the effects of the bond market take time to work their way into the regular markets, right? It takes time. So it's not a one-to-one relationship. It may take 2 or 3 months before this is felt, okay, by the markets. But meanwhile, it's mounting weight. It's like putting weight on the market that you can't see, and it limits the potential. So this is a very big part of knowing your environment, and why you can't ignore this, whether you're a Bitcoin maximalist or not. All right. So and let me just jump over to the S&P real quick, because this is what throws people off too. They only pay attention to mainstream news, and they say, oh, this bald guy doesn't know what he's talking about, because look, S&P is doing pretty good. This looks pretty good. Yeah, it looks pretty good. Okay. Except when you have a rising rate environment, this becomes very limited. And if you start buying stocks, right, in this area, and you're like, yeah, I'm making money, right? What you don't realize is the risk continues to increase and increase and increase. And when it starts to have effects, you're now in these positions, right? This thing turns red on you, starts pushing lows, and then you're like, oh, it'll come back. And that's when you get caught. So that's why it's important to gauge everything against interest rates. And don't get just caught up in, oh, this is a bullish trend. This is okay if you're a day trader. This is okay if you're looking for swing trades. Yeah, sure. There are plenty of opportunities in here. But if you're looking as like investing, you have to understand this economic cycle and where we are in it. This is why I've been staying away from long-term stocks. Okay. I just don't like them in this rising rate environment. I just don't like them. And why take the risk? Okay. If something like that is so clear. All right. So let me see what kind of questions we got here. Any questions from my members? Okay. From members only. It's a consolidation area. And not believe that. Okay. Hello from Holland. All right. Hey, welcome, Holland. Cool. All right. So any questions from my members? Let me see. I got Alex here. Nice move on. Okay, hold on. Let me just go back. Let me go back. Okay. Twice today. First one, I trailed the stop loss for a profit. And the second one, nice, Alice. Again, trade scanner. See, trade scanner. It's nice to have a tool like that, especially in this environment. Yeah, see, this is what Alice wrote. See that? Okay. Thank you, Alice. So Alex, nice move on ZN1, which is what I'm talking about here today. SPX, NSX, and gold seem to be in the process of developing a lower high. Dollar wants higher, he's asking. Well, let's take a look at the dollar index real quick. All right. So where is that thing? Dollar index. Understand that the dollar index is nothing more than a reflection of interest rates, right? So if interest rates are rising, dollar is probably going to continue higher. This is where people's opinions get all caught up and everyone's a fundamental expert and blah, 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 right? Everyone's an economist and this and that. Meanwhile, the chart says higher low and higher high is likely. Sure, there's a resistance right here on the dollar. But if rates continue higher, that resistance is likely to break. So how is this important? Well, if you're involved in any Forex pairs against the dollar, like euro or pound, there's probably going to be weakness there, even though this looks like a double top and you'd be like, yeah, I'm going to short the pound. Well, bad idea, because this is likely to break. Okay. So again, knowing your environment, knowing context, knowing how markets work can help you shape expectations. I would not short the euro here. Okay. I'm sorry. I would not. If this thing goes higher, euro is going to go lower. So I would not short the dollar is what I meant. Okay. Shorting the euro would probably be more sensible, even though the euro may look like it's at a support. If this dollar resistance breaks, euro support breaks, right? I mean, look, it's just, they're just inverse to each other. See? I mean, it's the same chart, just inverse. Euro is trying to break that support. So some people, oh, I'm going to go long euro. Have fun with that. Okay. The probability of that following through is not very good. The break is more likely because we have a rising rate environment. Okay. And I don't see any central banks coming off of that. Okay. I don't see them saying, well, we're going to lower rates soon. I don't see anything like that. All right. So anyway, good question, Alex. Okay. Let me just see what I have here. The view is blurry. Okay. Maybe you need to wear glasses, doctor. I'm joking. I don't know. I mean, that could be you know what that could be? The resolution that you have set for your YouTube thing. You can like change the resolutions. I don't know. I believe I'm streaming in HD, so it shouldn't be blurry. Okay. Anyway, thank you for mentioning that, though. All right. I don't see any other questions there. Anything else? Okay. Cool. From okay, got that. All right, everyone. So if I don't have any other questions, I'm just gonna leave you with this. Listen. So here, let's go back to Bitcoin. All right. So again, don't get caught in any of this stuff. All right. It really, really helps immensely to have a set of rules and being able to see those rules within the context of your environment. Right. I know that my systems are momentum based. So in a low volume environment, momentum based systems are going to be less likely to perform, but it doesn't mean that they won't perform. Clearly, we have some winning trades here. Okay. But again, these are because very specific rules are being followed. And I think one of the greatest advantages to having something like this is that it prevents you or it minimizes you from taking trades that are just completely random and erroneous, meaning there was no point in taking this trade, and it will reduce a lot of noise. It will reduce your trades because a trade scanner doesn't trade every single day. Some days it doesn't place any trades or doesn't call any trades, right? But it trades pretty often, like at least a couple of times a week, at least. So this would really change how your behavior, because if you think you're just going to sit in front of a screen and be like, oh yeah, I'll just wait for this crossovers, you're just playing a random game. All right. So you really need to have a set of rules, especially in a low volume environment. And even that is not enough to protect you completely. You need to realize what's going on here. And it's helpful to have that gauge of, is this environment more favorable to this type of trade? Is this thing calling a long or a short? What's the general market? Should I be going short Bitcoin at these levels? Not really, right? It's not that we're shorting. You'd be shorting into support levels here, right? So if you don't understand context and you still want to take that trade, like you have a couple of options. You can avoid the trade. So I don't short into supports. Okay, no problem. You ignore the trade. You could say, all right, I'll take the trade, but I know I'm shorting into supports. And I know it's ultra aggressive, so I'll be very careful with it. Maybe I'll take a smaller position, okay? Maybe I'll use a tighter stop or something, or I'll just get in and out real quick because I shouldn't expect much because we're going into a support. Maybe the trade just works out because the support breaks, all right? But you have to have some sort of, it helps to have some sort of knowledge so you can shape this expectation and better decide if you want to take that trade or not. I mean, Stian warns people all the time, you shouldn't take the trade scanner blindly. You shouldn't. I mean, it'd be nice. And at some point, if we can get the robot to trade for people, then you will be. But, I would hope to make some further improvements and add maybe some filters to that at that point. Anyway, another big question I get to is also risk, how much to risk. Typically 1% of your account is usually what I go by. I'm planning to make a video just about risk, how much to risk. So you have a better idea. Beginners don't understand that concept. And that's a very key concept, because if you only have like $1,000 in your account, right, but you expect to make $5,000 in a trade, the amount of risk that you have to take in order to accomplish that will wipe out your account. All right, if it's that small. So you need to understand that concept. Anyway, all right, you guys. So again, thanks for your time here today. Press the like button, press the boost button, subscribe to the channel if you enjoyed my video. And that's that. I'll see you guys in the community. Make sure you guys check the links in the description if you're interested in some of the things I talked about. Okay, so enjoy the rest of your day, the rest of your weekend. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you for watching.